In this video, we are going to be analysing MULN, ticker MULN. It was asked for, so we're going to get to it now. And if you want your own stock analysed, throw that in the comments. We'll get round to it when we can. Now, to get straight into it, we did do analysis earlier this week on the pure technicals, and it did actually stay within those ranges. Again, you can check that out. We said it wouldn't really go below that 120. That was the option price low. We can see we came down to that low. We got a small bounce. But what are the key things we want to be paying attention to now? And I want to put up a fundamental issue with this company, because again, sometimes you're asking about the fundamentals. Now, couldn't really find information on revenues, gross profits and all this. And again, that's even looking through the 10Ks, which is a bit concerning anyway. So the main things I could actually find were the EPS and the shares diluted. Again, we want to see diluted because it accounts for when they're diluting the shares, which is really key. And MULN from these two figures, and they're two key figures I always look at, are both really bad. So EPS diluted. Again, EPS you want to be seeing increasing year on year. You may have, that odd year where you pull back, but again, in general, it should be an overall uptrend. They've taken the other approach and just gone the complete other way. Earnings per share, minus $1.75, minus $1.30, minus $1.90, and then 2022, a new low of minus $2.80 per share. So again, red flag off the bat. Then shares diluted. For 3 years, they didn't dilute their shares. Coming into 2022, they went up by nearly 10 or over 10 folds. So again, big share dilution, not a good sign. So again, and what we can pay attention to is when we pull this up, what do the deviations say? What does the overall trend say? The fundamentals are downtrending and the technicals are downtrending. As soon as you have this, again, I don't know why people want to touch this long bias. Again, let me know in the comments, because I know some of you are holding this long bias. Let me know your reasoning for this, because to me, I just don't understand it. The only thing I could understand is maybe you're trying to buy at these lows, expecting, a 200% pump, even then if it starts to crash down. But maybe that's what you're looking for. That's the opportunity you see. But again, from a technical fundamental standpoint, I don't see opportunity down at these lows. Again, it's a gamble if you're waiting for these pops. Yes, we may get one. That's a gamble, though, to me, not something I'm looking for. The way I see the opportunity on this stock is if we pop up to 570, 730, 950, 1340, if we pop up to $17. Basically, all these standard deviation resistances, all of these are key levels. And how would I be using these? If from this 130 we're able to push all the way, we're going to have to go up around 350, 400%. But if we can start pushing towards that 570 level, to me, that is where I get short bias on this stock, and I want to start shorting this as much as I can. Again, there's two ways I'll look to trade this. Again, the short bias only, but it's whether I want to short the shares and buy calls to hedge the risk. Because again, you always want to find risk. If you're shorting anything like this overnight, it's quite stupid to short it nakedly. It could, push 50, 100%, probably, or maybe even more. And again, that's all risk you can't control. So buying the calls, you can control it in advance. That's how I'd look to play it if I'm shorting the outright shares. Another way to do it is through credit or debit spreads. Again, you can kind of research those if you don't know what they are. We do have a video on that on the channel. But again, that kind of lets you pick a pick a time frame. You can say, in 2 months, it will be under $5. That is how you can use those. So if they pump, again, it's not really going to stay at those elevated prices. You can just say 2-3 months down the line, it's going to be below that level. It's usually a 1-to-1 risk to reward, and you'll probably spend a few $100s to do that trade. So that's really what I'd be looking at. 570, first short bias level. To me, I'm not paying attention to the stock at all until it hits that level. If it hits that, short bias. If it comes to 720, short bias. If it comes to 950, another short bias. $14 or $13.50 and $17, again, more short bias levels. So the way I would be looking at it, the first time we kind of hit into this, you hit short bias. Now, I don't ever open the same position on the same day. So if we get short 570 and it's one of those really parabolic days, we break up past 720, past 950, and then we kind of close here for the day. The only time I would take kind of a second entry, because I would count it as a second trade, is if we start moving on that second day and we start to break into a new deviation. And if so, again, then I'll open up 2 positions. On any one trade, I would not have more than 3 short positions, because again, then you're kind of just kind of adding into losers, because if it's going parabolic, again, we still expect it to come below that level, so that's why we're getting those 2 other trades. But again, it's always still about risk management. We don't want to go 100% in one trade. 3 trades, if we're risking $200 a trade, risking up to 600 on that one trade, and allowing it those 6 to 9 or 6 months out or so, or two months out, doesn't really matter on the expiration. You can kind of decide that up to yourself. But again, just paying attention to those key levels. That's the opportunity I'm looking at. Let me know if you enjoyed the video. If you did, why not drop a like and subscribe. If you want your own stock analysed, again, throw that in the comments. And why don't you check out this analysis video.